Welcome back to Alpha Recap. I'm glad you could join us. We're wrapping up today's market action, and as always, if you have questions, you can reach us at stockalpha.ai. Jonathan, great to have you with us.
Thanks for having me. Excited to dig into what turned into a pretty constructive day after the close.
Let's start with the headlines. Quick snapshot. The S&P 500 ETF finished the day up roughly 0.4%. The NASDAQ 100 ETF was up about 0.4 as well. And the Russell 2000 ETF was the leader, up nearly 1%. So small caps actually outperformed today.
Yeah, and that small cap strength was the main narrative. It suggested a bit of rotation, investors shifting from concentrated mega cap growth into more cyclical, economically sensitive names. Not a huge rally, but more breadth. Analysts would describe the tone as neutral to constructive.
So what really stands out here is how that rotation showed up in specific sectors.
Exactly. Industrials and materials picked up momentum. You could see traders positioning for steadier growth. Energy names got a lift too, partly on company updates tying revenue to infrastructure and even AI-related energy demand.
Hold on, say that again. AI-related energy demand?
Right. Some midstream operators and infrastructure players mentioned projects or demand drivers linked to data center build-out and AI deployments. That kind of commentary can translate into durable, fee-based revenue expectations, which traders liked. It's one of those cross-sector linkages that's easy to miss until someone calls it out.
Interesting. And real estate and utilities showed up too, if I remember correctly.
They did. We saw REITs and some development names move higher on deal activity and policy signals that suggested continued demand for commercial and logistics space in parts of the country. Utilities had pockets of positive momentum after a few grid wins and project awards. That pushed their defensive income profile into a slightly growth-oriented light.
Yeah, that tracks.
Meanwhile, technology, represented by the NASDAQ 100 ETF, was steady. It finished marginally higher, but didn't provide that breakout leadership that drives broad market rallies. Megacap tech stayed resilient, which capped downside risk, but it wasn't the market's engine today.
So would you say this was flows-driven, fundamentals-driven, or headline-driven?
A mix. Modest ETF and futures buying supported the tape into the close, and small-cap funds attracted relative interest after underperforming earlier in the week. Then you had stock-specific catalysts, quarterly results and company commentary, and a few headline pockets, like renewed regulatory scrutiny in crypto and mixed messaging in cannabis. Those headlines created volatility in niche industries, which in turn nudged sector positioning.
Right. Let's talk specifics. Which individual names moved the tape and why?
A few worth calling out. BJ's Wholesale reported results highlighting the benefit of lower gasoline costs for consumer spending. That helped retail and consumer discretionary peers. A midstream operator, Energy Transfer, got attention for commentary tying revenue upside to infrastructure work. Then small-cap industrial Trex continued to trade well on strong brand demand. Insulet saw insider activity that drew interest, and crypto-linked names sold off a bit on regulatory chatter. Cannabis was all over the place. Some M&A and licensing talk, but also profit-taking and regulatory uncertainty.
Wow, that's a pretty diverse set of drivers. Honestly, I was a bit surprised by the grocery/retail angle. Lower gas helping margins.
It's one of those simple consumer dynamics that can matter more than people expect. Cheaper gas frees up discretionary spending, and companies with brick-and-mortar exposure can see traffic and margin improvements. Analysts flagged those comments at BJ's as a reminder of how macro inputs feed into retail results.
Okay, switching gears. How did the Fed narrative and yields play into today's tape?
No policy move today, but market participants continued to parse the Fed's data-dependent posture. Inflation has eased somewhat from earlier highs, but core price pressures still matter. Short-term yields were relatively stable, which helped mute discount rate uncertainty. That stability tends to favor cyclicals. They benefit when rates aren't repricing aggressively higher.
So, in plain language, stable yields meant investors weren't suddenly penalizing companies with longer future earnings.
Exactly. If yields spike, stocks with earnings far out in the future, long-duration growth names, get hurt. When yields hold steady, that drag isn't present, so cyclicals and financials can regain favor.
And technically, breadth and momentum. What did the tape suggest?
Breadth was constructive. The Russell 2000 ETF's near 1% gain relative to the S&P and NASDAQ signals broader participation beyond mega-cap tech. Momentum indicators were neutral to constructive, and volumes looked like steady buying rather than panic selling. Traders will want to see whether the small-cap strength persists into next week. Sustained IWM outperformance would be a firmer signal of a cyclical rotation.
Right. So, what would confirm this rotation then?
Confirmation would come from a few places. Multi-day outperformance in small caps, improving economic data tied to growth, and stable or not too high yields. Also, earnings follow through from retailers, energy, and industrials. If those reports beat expectations or show durable demand, the rotation gains credibility.
Short reaction? That makes sense.
Short reaction? Right.
Let's touch on the headline-sensitive areas, crypto and cannabis, quickly.
Crypto-linked equities and ETFs sold off on renewed regulatory scrutiny. Traders reacted to headlines more than to fundamental changes, which amplified intraday swings. Cannabis had mixed signals. Some licensing and M&A chatter lifted individual names, but regulatory uncertainty and profit-taking created disconnects across the group. These sectors remain headline-sensitive and can add volatility even when broader markets are steady.
Yeah, those sectors always seem to have their own gravity.
Totally. They can diverge from the overall market for long stretches because policy timelines and regulatory actions matter so much to their revenue paths.
Okay, practical watch list. What are the things traders and listeners should monitor heading into next week?
First, earnings cadence. Follow-through from retailers and energy names could reinforce or undercut the sector moves we saw. Second, regulatory headlines in crypto and cannabis. Any new guidance could spike volatility. Third, economic prints and Fed speakers. Since the Fed has emphasized data dependence, surprises in inflation or jobs data would shift rate expectations. And finally, bond yields. A decisive move there would quicken resorting of winners and losers.
Got it. Quick one. What should listeners make of the neutral to constructive read on the market?
It means the tape was supportive, but not euphoric. Markets were pricing stability more than bold optimism. Analysts note that without a Fed shock or big macro surprise, steady earnings and sector rotation can sustain gains. But pockets of risk remain. So the environment still calls for attention to headlines and data.
Yeah, absolutely.
And one practical point. If small cap strength persists, we'd expect industrials, materials, and financials to do relatively better. But if the tape reconverges back to mega cap leadership, breadth could narrow again.
Quick reactions. Interesting. Worth watching. Okay.
Yep. Little things can add up. A single company's earnings beat or miss can shift sector tone for a few sessions.
Before we wrap, any final quick takeaways for listeners?
3 quick ones. 1. Small caps led, suggesting a cyclical tilt. 2. Tech was steady, but not the growth engine today, so breadth improved. 3. Keep an eye on earnings, regulatory headlines, and yields. Those will decide whether this rotation sticks. Analysts note these are signals, not guarantees.
Great. Those are clear. All right, wrapping up. Today's market was constructive but measured, with a rotation into cyclicals and real assets while mega-cap tech held its ground. For listeners, remember this episode covered trends and data for informational purposes only. Analysts note market signals, but this isn't personalized investment advice.
Thanks, everyone. Always good to take a step back and see how the pieces fit together.
If you have questions about anything we covered today, head to stockalpha.ai, where you can ask us directly and we'll answer live. For more market analysis and insights, visit stockalpha.ai. And, as always, keep an eye on the data and the headlines. Thanks for listening to Alpha Recap, and we'll talk again after the next close.